Hello traders. In this video, I want to share a magical and very profitable strategy with you guys. By mastering this strategy, you won't need the other ones anymore. Do not understand this strategy because of its simplicity. I will go through everything step by step and try to teach you each and every detail. So be sure to watch the till end video. First of all, open the TradingView .com website and then select the GBP/JPY Forex currency pair. Next, I'll set my time to the 5-minute time frame for this strategy. But keep in mind that you can use this method on all time frames, and this strategy can be profitable on all of them. These three lines are just regular exponential moving averages. The only difference between these moving averages is how they are set up with various settings. If you use only one moving average line, you will see a lot of fake breakouts. Most traders find it confusing, especially beginners. These moving averages act as a channel or zone, holding the price within the channel. It reduces false breakouts and allows you to enter trades after the price breaks through channels. I tested this strategy 30 times. You can more than gain 60% of your account balance in just 2 weeks. In other words, if you have $1,000 in your account, you can make at least $600 using just one currency pair. The best part of this strategy is you have to risk only 2% per trade. This strategy is based on the trend, price action, and current momentum. 3 different moving averages work as dynamic support and resistance zones. I will explain this in the video. I will keep things as simple as possible with no complex indicators or tools, so it is very easy to understand and apply. So it is easy to find very profitable trades in a couple of hours. This strategy works very well on the lower time frames like 5-minute and 15 minutes. If you are new to scalping trading and still learning about trading, so this simple strategy is a good place to start trading because you will take the decision very quickly and hit buy and sell without thinking about fancy indicators. Now it's time to add indicators to our chart. Go to the indicators menu and search EMA. Apply the exponential moving average to the chart. Go to the indicator settings and change the length to 32. Customize line thickness as you like. Now add another exponential moving average to the chart. Go to the second moving average settings and change the length to 32 and change the source to low. Now, add the last exponential moving average to the chart. Go to the third EMA settings and change the length to 32 and change the source to high. I increase the line thickness. Now our first setup is ready. As I already mentioned earlier in the video, we will use these 3 moving averages as dynamic support and resistance zones. Traders usually draw traditional horizontal support and resistance lines, but the price does not exactly react to support and resistance lines. But if you draw a zone on market prices high and low, it's more accurate. The top and bottom moving averages create excellent support and resistance zones in the chart. It is more accurate than using a single moving average line. Like traditional support and resistance zones, this will save us from false breakouts. And if you do not have a laptop or PC, even if you trade with cell phone devices, you can use this strategy to make some money. Before we continue, you can like this video and subscribing and turning on notifications. Let's now get started with the strategy rules. We get into it. The first rule is that the price should cross the moving average zone from above to below. This indicates that the current trend is about to change from bullish to bearish. However, this does not exactly confirm the reversal movement. Price may come back to the previous trend. When a large move like this takes place, the price retraces to a higher level 90% of the time. And the second rule is the market price should hold in the moving average zone. Sometimes the zone will hold the price perfectly like this. But many times you will see that the market price crosses upwards and then quickly returns back to the zone. Or sometimes a bullish candle closes above the zone and the next candle immediately goes to the zone. These scenarios are valid with our second rule. Our main target is the price hold inside the moving average zone. You need to have a basic knowledge of candlestick patterns to identify the high momentum candles. The main idea is to find a cross down with good momentum so we can identify the momentum that just started and the market will continue in that direction. You can enter the trade here. Set your stop loss above the swing high or above all three moving averages. The first profit target is 1:1 and the second profit target is 1:2. When the first target of profit is hit, you can move up the stop loss, break even and wait for the price to reach the second profit target, so it becomes a risk-free trade. You can re-enter the market when you get another pullback in the direction of the trend, but I would recommend you to do only 2 trades in the direction of a single trend and keep low the profit targets low in the second and third trades. Buy rules are completely opposite of the sell rules. First of all, the price should cross above the moving averages, leaving a gap between the market price and the moving average. The second rule is the price should hold inside the moving average zone. I explain 3 scenarios that can happen at this moment. First, 1, the price moves down and goes up immediately, leaving a candlestick shadow. Second, the price is close below the moving average, but the very next candle rejects the price and moves up, printing a bullish candle on the chart. The third one, the price perfectly holds the moving average zone and does not cross the lower moving average line. The third rule is that the price must cross above the higher moving average with momentum and should close above it. I place the buy trade here. Here our first target profit will be 1:1 and the second target profit will be 1:2. Do not set a profit target below 1:1 and above 1:2. Now stop loss above the lower moving average line or swing low of the retracement. Even though if the stop loss is too far away, do not enter the trade. Now I'm going to test this strategy on the Euro-USD currency pair. I will take 100 trades and I will calculate the accuracy and gain of this strategy. Okay, the results are in after 2-week test is truly amazing. So let's check it out. Now, I used a 5-minute time frame. This was done using a 1:1.5 and 1:2 risks to reward ratio on Euro-USD. And it took 2 weeks of price data to find the 50 trade signals, which is actually very good. There were 32 winners and 18 losses. The win rate is 64%. This is a really good win rate because our risk-reward ratio is 1:1 and 1:2. The most won in a row was 6 and the most lost in a row is 2. The gain on the account was 85% and that's risking 2% per trade. That means if you had a $500 account, you can gain at least $400 profit using only one currency pair. The good thing about this strategy is that you only have to risk 2% on each trade. It is still very profitable if you put in 20 trades. At least 13 trades will be profitable with a 1:1.5 risk-reward ratios. Don't risk more than 2% per trade. You can use more than one currency pair and you can gain more money with this strategy. Now I'm going to improve the accuracy of this indicator. If you want, you can use this indicator alone as well. You have already seen this amazing result. So for this we will add another new indicator. But before that, I know most people use the free version of TradingView, and in the free version you are allowed to add only 3 indicators on the chart. On top of the page, click on the indicators option and open the tab. On the search bar, you can type 3 EMA. You can use this indicator right here. The same settings as before, but with 3 exponential moving averages in one indicator. We can eliminate all fake signals using the methods that I'm going to introduce later on this video. But before moving on to that, if you're enjoying this video, make sure to hit a like and subscribe and help the channel with the YouTube algorithm. Okay, now let me teach you how to filter fake signals. We need to add another indicator to our chart. On top of the page, click on the indicator S option and open the tab. On the search bar type swing arm ATR. Now this is how the indicator looks, and it contains some signal in zone line. To make the most of the indicator, we must open the settings of the indicator and change some things up so that the indicator can become more optimized and efficient for our strategy. First, in this style tab we disable the sum option. Next we move to the input section, and from there we change the ATR period to 200 and the ATR factor to 8. That's it. Now we can click on OK and close the tab. Let me explain how we will be using the indicator in the EMA strategy. The way we use it is that whenever the black flag indicator is green line, it means that we're currently at an uptrend movement and we're allowed to enter only buy trades. And if the indicator red line, it tells us that we are as a downtrend movement and we should enter only short or sell trades. Let's see, the indicator has worked with the first one. Here we got a bearish or sell signal. Here the bearish candlestick pattern is created by touching the moving average. Let's execute the trade and set the stop loss above the moving average so we can see that our stop loss has been hit. On this trade I kept the second indicator hidden. You can see now the second indicator is green color. This means the market is an uptrend, which allowed us to execute trades of long only. So the trade we just made was a wrong trade. So now you can see we have got a perfect buy signal here. So we have made a loss on this trade also. So now let's look at the second indicator. It's red. So this was a fake signal on which we just executed the trade. You can filter out those fake signals easily using this indicator. Now that we've completely learned this strategy, I want to test it on the GBP/JPY chart. We achieved nearly 250% profit, and this much profit in such few trades is truly magically. And one very important thing, when you use this indicator on 5-minute or 15-minute time frame, then your stop loss will be very small. So it may be that the broker you use, they provide you very high spread, due to which your chances of hitting the stop loss will be high. So I would request you to use IC Market, which will provide you zero spread, and you will be able to execute pinpoint trades in market, link in a description. Join now. But if you want to know about another great strategy that is just one, make sure to watch this next video shown on the screen. See you soon. Thanks for watching our video.